from highest and best, I guess, Michelle, you can explain how that all works.
I can.
Because, that's not really my
I was hoping.
avenue of expertise.
Well, let me just invite Maria.
So, but highest and best from an attorney's perspective, we get the memo and we're expected to act very quickly so that they don't lose any of the backups. And what we do is we'll get the memo, get contracts out immediately, and within a very short time frame, everyone has to.
So basically, for highest and best, when do people use highest and best? So realtors call for it when typically there are 2 or more offers. At least that's what I do. I wait for at least 2 or 3 offers and that I receive on the property, and then I will call for highest and best, because I really want the seller to have the ability to choose the best offer, the most competitive offer from among several. And so what buyers have to do, they have to present not only the best price, but the best terms. And when you're evaluating an offer, you're not only looking at who's giving you the best price, but you're also looking at the best terms. Excuse me. So you're looking to see when they can close. Is it by mutual agreement? You're also looking to see if the terms are right. Are they going to waive the financing, waive the inspections, or make it for informational purposes only? You look at a closing date. Is it good for both parties, for both the buyer and the seller? And then you really evaluate all the different offers. I'm not sure where Maria is. I guess maybe she's on another phone call. But so you really have to look to see what's the most competitive bid, and it doesn't necessarily mean it's the best price, because often you get the best price, but then the other terms are just not satisfactory to the seller, and ultimately the seller will make the decision in terms of what they choose and in terms of which offer they choose. And you really want to be very competitive in your offer when you're submitting it. I think also the other thing I tell my clients to do is always to put in their attorney information, right? Because that's showing that they have all their eggs in order and they really can move forward quickly, as well as an inspector. And not only an inspector's name, but I always tell my client to set up the inspection date. Usually most inspectors will not charge them if they have to cancel, if they're given 24-hour notice. So I think it's very important to have all your eggs in order. And
yes, and also if you're waiving a mortgage contingency, that you've actually done your due diligence before, you've spoken with a mortgage person, and they've sort of done a quick look at your finances and what assets you have, so that you know that you can move forward and comfortably waive the contingency without any additional stress, and certainly, like if you're on the edge, it doesn't make sense to make a very competitive offer.
Right.
If you need the mortgage contingency, so you can make an offer, but you want to make sure you're comfortable with waiving the contingency.
Right. I think the other thing you can do, if you know you're competing with some cash offers, you can have your mortgage broker or banker take it to underwriting, and in many cases they step up the level of the pre-approval because it's been taken to underwriting and almost everything has been evaluated except a contract and an appraisal. Right. So I think that these are different things. I'm not sure what's happening with Maria, but what we can do is invite her again, and maybe she can chime in
on the financing aspect.
On the financing aspect. So give me one more moment.
But in the meanwhile, once the term sheet comes out, usually we'll get contracts and do everything simultaneously, so everything moves quickly, so that if there were backups for some reason, if something falls through, you can go to the next backup, which I see occasionally happen. And if someone's getting skittish, or something is
the
inspection doesn't go well,
right,
or there's something, some life event that occurs. I've had that happen where
right,
you're just not really ready to act.
Right.
Then they can go to the backup. So that's why everything moves very quickly. And you have to be prepared that it doesn't go on for weeks. It goes on for a short period.
Oh, here's Maria. Maria.
Hi, Scott. Hey, how are you?
we've spoken a lot about highest and best. Maybe you can chime in and tell us from the financing point of view perspective.
Yeah, yeah. So, I mean, whenever a customer comes to me um and says like, "Hey, I have to do a highest and best," there's a couple of things that we're looking at for them, right? Certainly we want to ensure that that if they obviously if they're coming to me, they need financing, right?
Right,
So we want to make sure that like what they can that obviously they're going to be able to afford the like a higher loan amount if they're going to be offering higher, but
right,
more importantly is I'm also looking to make sure that they have enough assets to cover any difference in price that they're going up from, say, when their initial price was, especially if they tell me that they're going to do like an above ask, right? Like
right.
the ask is, let's call it $1 million, and they want to offer 1.1 because as a lender, and this is for all lenders, not just for me, any lender is only going to lend based off of either the contract price, the agreed upon price, or the appraisal, whichever is the lower of the two if they're not the same. So I always want to be very clear with them that, hey, look, the asking price was 1 million. You're going to offer 1.1. We can't expect that the appraisal is going to come in at 1.1. I mean, there was somebody like a Michelle comes in and priced it out and said, hey, we think that a good price to ask for is 1 million. You probably have done your due diligence. And so when that scenario presents itself, we need to make sure that the buyer then has enough money to cover that difference, right? Because they're not getting 100% financing. Maybe they're doing 20% down. They would have to put 20% down plus that difference if the appraisal doesn't support the purchase price.
Correct, correct. So
And things can happen. You can have an appraiser who comes out from some other area
area,
that doesn't really know the area because it's, very,
Yeah, I mean, look, that's a whole
happen.
that should be a whole topic for another day. But
yeah,
but
yeah.
no, it's so true, Michelle. It's a very there was something called appraisal independence that came out, like I want to call it like 2007 ish.
Well, right after
Um,
the last recession, when they
yeah, right,
right,
right, with the housing
right,
crisis, and what that basically put into place was it's a very hands off, arm's length transaction between the lender and the appraisers. Back when I started in my career, I had all the appraisers in my phone, and I actually used to assign, who I wanted to appraise the property.
not that,
Um,
not
now.
more.
I'm not even permitted to know the name of the
Right,
appraiser,
right.
certainly not allowed to have any contact whatsoever. And so it's all done through, an intermediary or what's called like an appraisal vendor management company. And so when that happens, I mean, look, lenders have the ability to we like at Citizens where I work, we have in our area what's called a panel of appraisers. So we have vetted the appraisers. They go on this panel, but it's from there, it's a round robin approach, right? It's not like where we know who's going to be
Yeah,
picked to
right.
get that order.
It's very independent. The
Yes.
companies, right? The
Yeah.
banks, right, and you're not aware of it. And surely we're not able to choose the appraiser. We really have
Right. You're not either, right? Nor is the attorney.
right,
Have nothing to do with you.
right,
I don't
Yeah.
even, most times I don't actually see it. So
right, right.
Right.
There's a
Right.
there's a discrepancy where when right after the crisis in 2008, there were times when the appraisers were sent. They had no idea of the community, and the appraisals came in very low. We had to
Yeah.
appeal them, and in some cases they won, the client won, the buyer won,
Yeah.
but it was a real problem. So
Yeah.
thankfully, this is not an issue anyway. I will say that most of the appraisers do know the area, at least the ones that we see,
Yeah.
um, and if I see that they really are coming from a distance when they give me their business card, I will always ask, "Are you aware of the community that this
Right.
is in?" In most cases, they are. So that's really not a big
a problem. Yeah.
not a big issue, but definitely from your standpoint, from when people are throwing out numbers, and in the last few years they were throwing very high numbers in terms of their offers when they were going to compete with other people. They were giving very high offers, and in many cases they were not coming in with an appraisal, especially if there was financing. So
Right.
even if it's cash, I mean, people should understand some sort of value
Right.
that they're.
I also want to add that a lot of times when a buyer comes to me and says, "Hey, I have to make a best and final," a lot of times, not only do they want me to approve them for the higher loan amount, but also they'll ask me, hey, can I make this a non-contingent offer? I want to go in like best and final, and also like, hey, I don't need a contingency, even though I'm going to get a mortgage.
Right.
And so I think that, I would say to any buyers out there, you need to be really careful and really, quiz your loan officer that's working, or mortgage banker like myself, on the pre-approval, because there's different levels of due diligence with a pre-approval. I've seen some pre-approvals where, a loan officer like basically looked at their credit and took at word like what the person put down for how
Right.
much they make, versus, oh, okay, I've reviewed your tax returns, your P&Ls, your pay stubs, your bank statements. Those, not every pre-approval is created equally. So if you're making a best and final and you also are wanting to go non-contingent, make sure that you have a really solid pre-approval.
And I think also to check the pre-approval with, especially if you're representing the seller, I always ask if I could check to speak to
Yep.
the mortgage broker or the banker to really review that all of these documents were looked at.
Yes. Yeah.
Still, sometimes, people don't know or that they had like some tax issue. I've had it happen with this
Yeah.
tax IRS thing that they're not really aware of
Exactly. Yeah. No, I mean,
and it pops up and you've waived the contingency and you're sort of in a really bad spot at that point. You're
Right.
scrambling.
I just spoke to somebody earlier today who owns like 4 gyms, and when you look at the tax returns, it's making lots of money. But as I looked more closely, I saw that he had it set up as a nonprofit. And I said, hey, look, your business is set up as a nonprofit, which I'm sure is great because you're not really paying much taxes, but you are not, permitted to, like, I can't use any of this income for you, like only what you pay yourself in W-2. And so you're thinking you're going to qualify for a $2 million property. I mean, I really could qualify you for like a $500,000 property. So that was, wide-eyed opening for him.
Right.
Right.
People don't, they don't realize like it's how you claim your taxes. If you're
Right.
getting a big bonus, sometimes like
They
a lot
don't
of
look at it.
they don't look at that. I mean,
Yeah,
right,
yeah, exactly.
purposes, while it could be a huge amount, so.
Yep.
Right. So it's very interesting. So on that note, I know that you have to take another call, Marie, right?
I do. I have to hop to another call, but it's great to see you ladies. Happy Friday.
Have a great
Have a
day.
great weekend.
You guys as well. All right. We'll talk next week.
Bye.
Ciao. Bye.